Hello and welcome to another video. So on previous video talked about using biometric feedback data to optimize precise scalping entry points, and I talked about using devices like the smartwatch and the I how do you call it? I've forgotten the name, but those are some of the devices that you can use to monitor reaction or how you do behave under different circumstances. So in this video, I want us to talk about how to master liquidity in a quicker way. Liquidity is a very important concept in trading because if you don't understand liquidity, then you're the liquidity. Maybe if you're a beginner trader, or maybe intermediate, maybe you've heard about liquidity and still facing losses and so on. So I just want to make this a quick one so that you guys can really understand what we're talking about. So liquidity exists in different forms. We have swing highs like this one. This is a swing high. This is also a swing high. This is liquidity. This is a swing low down there. This is also another swing low. This is also liquidity. So this is an on hourly time frame. Why is this liquidity? First of all, there are some people. This is also swing high, pretty much. Yeah. There's some traders who entered short here and they were selling gold here. Maybe in lower time frames, they were scalping, selling gold. Maybe they got entry maybe in 5 minutes at this area. They put their stop loss right here, and maybe they were targeting gold to maybe this loss right here. The moment you put your stop loss right here, that is liquidity. Market has to visit that area. And also, when you take a look at it, there's some other traders who had bought gold around maybe from this area here. Okay, they bought gold from around this possible area, maybe on lower time frames, and they put their stop loss right there on this swing low here. You see this? So price is currently pushing towards. So price started pushing towards their direction, right? And you see they have their take profit at this PDA right here, like this one here. So this person who starts selling gold right here, hoping to take their take profit from down here, they're in they're caught in between because you see the algorithm has to deliver to this buyers who bought here, but there are also some other buyers who are very greedy. They bought here, they want to take their profit up here. Okay, you see what price did? Price came in here. Now for the ones who sold over here, they were stopped out. Once price came back and take these ones out, first of all, price comes back in, takes them out because this is liquidity. Liquidity is what is moving these markets. The markets needs liquidity. Liquidity, in other terms, the best way I can explain liquidity is money. Liquidity is money. When you put your stop loss right here, that is money at risk. So when you lose it, that money is in the market. When you put your take profit right here, that is money. You're gaining money. So you're either making money or losing it. So over here, price takes them out by this candle here, then push higher to deliver to those smart ones who are taking their profit on this swing high. You see them? And those who are taking the profit from this swing high here. But those who are expecting this external range liquidity to be taken were never spared. Meaning that when price went on to deliver here, it removed those who had put their stop loss right here. So these swing highs are liquidity spots. These are liquidity. So how can we trade or how can we trade liquidity properly? This is how you do it. First of all, mark your session. You can work with all session high. You can work with all the previous day highs and lows. When I zoom out on daily time frame, you'll realize that's pretty much the same thing. For example, this drop you're seeing right here, this was engineered by a liquidity. This is all liquidity engineered, this move. So for example, this high is Asian highs. This one here, this part of Asian highs. You see all this move. This is Asian session. There was Asian liquidity resting above here, buy side liquidity. What does the price do? Price comes and take it out. After taking it out, that candle comes back and close in, it wakes it. This is a perfect example of liquidity grab or liquidity sweep. Sorry, not liquidity grab, liquidity sweep. It has been swept there. So the smart traders are going to be okay. Once this has happened, they move into lower time frames, for example, like 15 minutes. This is the sweep from this high from 15 minutes. So what are they looking for? They're waiting for market structure shift or a break of structure, for example, from here, which we get from here, and now after getting this, we also have a gap displacement. Beautiful. Displacement is always important. So they wait for price to come back to fill that gap. Then they sell it. For example, they go for a short like that. When price revisits that gap like there, like that, they put their stop loss above there, which is also liquidity. You see? So the only advantage they have here is that they're smart because they want to take their profit down here, 1 to 2, under this swing here, and see price delivers. But if they're greedy, they say, you know what, I want this one down here. You want to grant because this market is a ranging market. When it is ranging, you don't look for external range liquidity. Work with internal range liquidity. Okay, you see price came back in well there. If you push lower into five minutes time frame, it's even way better. Pretty much after sweeping liquid right there, we have the breaker in that area, that breaker structure, that level. So wait for price to come back into the gap. If you want to use the extreme gap, for example, this one here, price still came in there. You see that? For a trader who understand the concept of time and price, they would really wait until price comes. If price it at the right place at the right time, that's when you attack. So another trader would have sold it from that gap when this gap is being filled. You see, price came back in there. That would have even given them a better risk reward ratio. There we go. All this is liquidity. Their take profit down there is liquidity. Their stop loss right there is liquidity. Later on, another trader will say, you know what? For example, right here, they say, we sweep this liquidity. So we wait to see how this candle close. If it closed back in, for example, the way this one took liquidity and closed back in, you see this one. This is another. This is another. Liquidity sweep. So we come back into 5 minutes or 15 minutes time frame. We see, for example, this is the sweep. We see if we have anything to do with a break of structure to the upside, and yeah, we had something here. We had a break of structure somewhere here. We had a breaker somewhere on there. You see this? But unfortunately, this end up failing because if they let's assume the stop loss is down there, because I'm part of those traders who are looking for longing this towards, because there's something missing that price has not done here. This is a setup. You see, there's something missing. There's something here that I would really love to see price go into. But you see, price sometimes can do what it wanna do. It's not about me controlling this. It's about it delivering. So you see over here, price is now currently moving against that bias. It hasn't yet tapped, for example, this traders out. You see, but it is headed there. Okay. So if you take a look at, for example, what's happening apparently here, and then this move to the downside has been engineered. You see, for example, you have a break of structure somewhere there with a gap, price push lower. Break of structure with a gap, or these are market structure shift with a gap. It retested, then push lower. The same thing here. And you see, pretty much also maybe what yeah, I think also because this candle has around 4 minutes, so I don't know if this really gonna make it up. Yeah, you see that? You see that? Definitely. So it is a bearish price move towards this liquidity. So this is how you spot liquidity. All the swing highs, the swing lows you see on all those time frames, for example, session highs, session lows, meaning that I'm talking about London highs, London lows, New York highs, New York lows. I'm talking about all those at liquidity. Previous day highs, previous day lows, that's liquidity. But there's even um, more deeper concept about liquidity now about fair value gaps, because that's also liquidity. These fair value gaps are liquidity. Why do you think price is coming back to mitigate them? That's liquidity. So there's more to liquidity concept, but that I hope this was a short one, just to, to give you guys heads up of what's happening. For example, what has happened with gold today, like why somebody might wonder, like, why did gold do this? Understand liquidity. If you understand liquidity, once you see as like a liquidity has been grabbed, for example, a specific session, wait for a market structure shift or a break of structure towards the side of direction that you'd like that move happen, then enter on displacement. This actually this ICT concept. This is not Cashline concept. I haven't talked about Cashline concept yet, but this ICT concept, they do work day in day out. A lot of people are passing pro farms. A lot of people are just doing the same thing. Let me give you one last example. Let's go to another day. Which other day? Let's talk. This was Monday. Okay, this is how it began Monday. Or let's even talk Tuesday. Like I'm seeing it everywhere. Okay, let's talk Tuesday. Tuesday is even better because I like what it did. We had liquidity right here. This liquidity being here, meaning that there are some people who sold the gold somewhere up there and they are planning to take their profit when this swing low, for example, there's another swing low here, was taken out. Price comes in and deliver after delivery. Now there are some people starting to buy over here. They put their stop loss right here. They're targeting to take their profit up there. You see that? Now once this happens, you just push into lower time frame. For example, we took this liquidity, price went on to deliver. Now once price delivers, there are some people who sold here again. They were planning to take their profit under these newly created lows, and you see that's exactly where price came into. Now when price came into there, we took liquidity right there, and we, price started retracing back. Now I'm among those people who really wanted price to, go back here, because we have a PDRA that has been left hanging. This one, this is a very important PDRA, but unfortunately, it is playing games. You see this? This is setup. It's playing games right here, because right now it's gonna be tricking people. I'm going down, then all of a sudden it start pushing higher. Take a look at this closely. Today we did not have even a single break of like a single market structure shift on hourly time frame. We never had it. Just take a look at it. All day, price has been just playing within this range. But even with this playing within this range, I've taught you guys on how you can be able to maneuver around here. This is liquidity. Wait for price, take that liquidity, close back in, move into a lower time frames, seek for a break of structure or market structure shift or change in state of delivery inside or towards the direction that you want price to go to, as much as it is undelivered. But once price comes undelivered, then you're still planning on selling, then there's a problem. That's not gonna work out. In this scenario, we hunt liquidity to liquidity. Once liquidity has been hunt, now look for the opposite direction. So apparently, what's happening here right now seems like on what's happening here. If we end up closing below this, then we'll have to wait for the next candle to give us confirmation whether we want to go higher by closing back in the range. But if it ends up creating a gap, then ladies and gentlemen, be ready. We drop in. I can't really predict what's going to happen tomorrow. I can't do that. But what I can do is that I'm going to read what's happening right now, and I'm going to use what's happening right now against, like to skim entries and exit and so on based on what's happening. Sometimes we get it wrong because you see, for example, like me, I have an issue with being undecided. I have that problem, indecision. So, and once I make a decision, that's it, period. I never change about it. So that's a challenge that I do have with myself. But if you are willing to be flexible, meaning that you don't follow your own analysis, like you don't follow your own what you'd like to see, follow what price is showing you. If it shows you, I'm breaking this structure, I'm I'm targeting some liquidity down here. Do as it says. Don't say, no, 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 we have to go higher and so on. Yeah, I know we have to go higher, but now we can't force it. I can't force this thing. We can't force it. There's an algorithm at work here. There's big financial institutions at work here. We are retail traders. We are not even anywhere close to even match these people. They're so powerful. They have the money. They have the machines. They have the all the technology and all the stuff they need to make this happen. So what makes you think you with your few dollars you're gonna compete against these guys? The best thing we can do is ride along with them, ride along with them. When they go down, we go down with them. When they go up, we go up with them. And the algorithm will always leave a signature. So first thing first, liquidity grab. After liquidity grab, wait for market structure shift on lower time frames. We enter when price gives displacement and so on. Then we use that to to seek entries. And today there was so many entry opportunities. This was the first one. Over here, you see again, price comes and displays below there, leaves a gap. Entry on that gap, you see that, drops it down. It has happened here until price finally come and and deliver. So over here, what you're missing apparently right now is a serious displacement to the upside. We are missing that apparently, and I don't know. Markets are closing in the next maybe 2 hours. I think, yeah, 2 hours and or 1 hour maybe, and it's just not worth it. It's just not worth it. Right now there's nothing worth to do here. I don't know, I was expecting when Trump was meeting, the Chinese president today, I was expecting some big moves, but that hasn't really happened. You see, these guys are setting the temperature for something next week. So next week, expect some very big moves. So what's on my mind? I have this PDR up here. I'd like to see this tapped. 47, 49. Then we drop. When you drop where to? This bullish. We have a bullish PDRA right here. We have a bullish fair value gap. See this one? Yes, I want this drop down here. Once we drop down here, we go in higher. Now, to further explain what I was talking about, this was a daily swing low. This one here. Liquidity was swept. We closed back in, and you see what happened? Boom, went to the next one above it. So after the next one above it also has been swept, you see price created a new swing high. It was taken out by this candle. Now we expect price to push lower back to this one. Then after this one, we target something above. Probably I'm targeting 5,000. If we hit 5,000, then definitely a serious drop is coming in. And this serious drop is going to be backed by a pandemic. Trust me. It's either going to be a virus or World War III. Something's going to happen up here. Just in a matter of few months, just a few months, this is going to happen, and that's going to be the right economic driver to push markets down. I don't know what it's going to be, but either way, let's hope for the best. So that's it for the for this video about liquidity. If you have any questions, just let me know, and we'll see how to to reach out and help you.